Hey everybody, Mr. Frankham here. Okay, today is April 15th, which on a normal year would actually be tax day, the day when everybody has to file their taxes. Although because of the COVID-19 virus, that day has actually been pushed back for uh, workers uh, who receive the W-2. That's pushed back till July actually. But for us, we're going to still keep April 15th as tax day. So about to the end, you have a week and a half to do this assignment. Um, so if you don't do it by the end of next week, then you will get a reduction in your tax return. Okay? All right, so let's go through step by step here and show you what you need to do to file your taxes. Okay, so everybody log on to Canvas, and let me switch screens here. Okay, so you're going to be logged into Canvas on the assignment that says 1040 tax form. Okay, you're going to click this link right here that says 1040, and that's going to allow you to bring up a 1040 on an Excel spreadsheet. Okay, also click this link right here that says use this link to complete the calculation for line 21. Just go ahead and click that so you have it up and ready to go. All right, now let's go back to the assignment. The computer's a little slow this morning. Okay, so it says use the 1040 tax form and your W-2 from the RWC to file your taxes. You may have additional money, or sorry, if you made additional money. That's talking to you, Hayden Ingram, and anybody else who started their own business. That would include any money from Life Happens, in-class business, rental properties. That's talking to you, Brandon Kaufman. Capital gains. Capital gains means if you made any money selling stocks, that would be a capital gain. So make sure you add that to your income. Remember, in the simulation, you're married, and if you have children from the RWC, you can list them in your household. So when filing your 1040, you need to decide if you want to use the itemized deduction or the standard deduction. Okay, the standard deduction this year is $24,800, and you might be confused on what that means. We'll kind of talk about it as we go through. Itemized deductions are things like mortgage interest, any interest you paid in for your mortgage, income tax from the previous year, medical expenses that you've paid, any charitable contributions you've made. Those would all be things that would be considered itemized deductions. However, for the purposes of this, no, I don't think I've ever had any students whose itemized deductions ended up being higher than the standard deduction. So I'm just going to tell all of you, just use the standard deduction because I doubt there's any way that any of you would have had itemized deductions that total more than $24,800. Okay, and then use the link to complete the calculation for line 21 and then upload your completed tax form. Okay, so let's jump right into it. Let's go to, first thing you're going to need to do is go to the RWC, and let me impersonate my self. Okay, so you go to the RWC and you're going to click on Money Management. You're going to click on Employment HR, and then this is where you find your pay stub normally, but you're going to click on the W-2 and then select W-2 period. It's going to be for the tax year 2020. Okay, so your W-2 gives you information, wages and tips, other compensation. So in total this year, I've been paid $65,597.45. Now, if you look right here, the tax period is just the dates from the beginning of the semester up until April 5th. Okay, any money That's the money I made between those dates. Anything after and the 2 weeks since April 5th will not count for this tax year. So it's just the previous 12 months in the simulation. Okay, I had $9,019.64 withheld in federal income tax, and the FICA tax, which, as you recall, FICA is Social Security and Medicare. Okay, that was $7,379.73 withheld. Okay, so I'm going to need to use this information. So let's go back to let's bring up the the 1040. I don't know what happened to my other window here. That is strange. It just disappeared on me. Okay. That's okay. We'll go from here. So name, come up here, and I'm just going to put in the name and the date. Today is tax day, appropriately. Okay, and if you are, all of you are married, so I want everybody to click married, and you're going to file jointly. Okay, you might not be able to actually click on that, but if there's anything you can do. I'm not sure. Okay, let's see if that worked. No, okay. Don't worry about that. Just everybody is married filing jointly, but normally you check the box. Okay. All right, the household. I think there's one student in all my classes. One student has, I think, 3 children. Quite a few of you have twins, and a few more have 1 child. So you're going to list everybody in your household, so except for yourself. So you have your spouse. So you can, so I'll just name my spouse, Mrs. Frankham. And slash boss. Okay. And then I'll have Elroy Frankham. Okay. And Elroy is under 17, so I checked that. And Elfon. The child. Okay, so I have 2 children. Most of you don't have any children, so you wouldn't be able to list those. So the total number in my household, including myself, is 4. So I put that on line 7. Okay. All right. Now, what are you going to do with the W4s, or sorry, with the 1040 is you're just going to go down the line and follow the instructions. So it says, line 8 says wages, salary, tips, etc. That comes from your W2 in the RWC. So let me see if I can find that. Okay, where did it go? I'm so confused on this. That screen just disappeared. And I don't know where. Oh, here we go. Okay. Okay, so, I'm going to do this so I don't have to keep going back to it. All right, so line 8 of my 1040 asks for my wages, salary, tips, etc. Okay, and that is found right here on my W4. Sorry, my W2. So I'm just going to go ahead and copy and paste that into my 1040. Okay, now the only thing as you're doing that, the one thing I want to point out to you is any contributions you have made to your 401k within that time frame before April 5th, they are a tax deferment. That means you wouldn't pay taxes on them within this year. Now, normally in real life, your W-2 will automatically deduct those contributions. But in this case, it doesn't. So I want you to go into banking, click banking, and 401k details. So back on January 15th, I put in $550 into my 401k. So that's tax deferred money. That means I don't have to pay taxes on it right now. So that's going to put me down to it's 550. So I'm going to subtract that from that. That's going to put me down to $65,047 if I did my math right. Okay, so that reduces my wages and salary by $550. Now, some of you may have already put in $10,000, so you can subtract it from whatever that is. Okay, business income or loss. Let's say I had, I had a little business in class, and some of you did have businesses. If you actually ran a business, you would have had to have paid me $300 to start. Okay, so you could count that as business loss if you didn't make any money after you paid the $300. If you made additional money after that, you just figure out however much it is. So I'll say that I had, let's say I know Tristan Sparrow did a little concert, played his guitar, and I think he made a little bit of money off of that. So I don't know how much he made, but let's just say I made $1,200 doing a little in-class business. Okay. All right, capital gains. Now, capital gains, that means this is money that you made selling stocks or selling an asset. It also could apply to a house, but I don't think anybody sold a house. Okay, so what a capital gain is, if I buy a stock for $10 and then sell it for $15, my capital gain is $5. Okay, so what I want you to do on this is go to banking, click checking, and then you're going to search stock sales. Okay, stock sale. Sorry, just stock sale. So I've sold stocks 4 times. These last 2 were after April 15th, or April 5th. I'm just going to count them anyway. But remember, you look at the date. If it's before April 5th, you have to count it. If it's after April 5th, it would be on the next year's. Okay. All right. So if you look at now, if it was stock that came from the class, so you can see this one right here says SHHS A1 stock. Okay, I didn't have to pay for that, so I sold it, and it credited me $15.88. I have to count that as income. Okay, because it's a capital gain because I didn't pay anything for the stock. Okay, on this one, which was in January, I bought a share for $40.99. I sold it for $39.25, so I actually lost money. Okay, so that was so this, if it was a company stock like Swoosh Athletics or ExxonMobil, it will tell you the net profit. Okay, and so I want you to use this number right here. Okay, if it was a class stock, you don't use the net profit because remember, you didn't have to pay anything for it. So I want you to use this amount that was credited to your account. Okay, so I'm just going to total this up. And so let's start with this one was a net profit of 0. Okay, I sold it for the same price I bought it for. Okay, this one was a net profit of, this was a class stock, SHHS A1. So even though it says my net profit was negative, remember, I didn't pay anything for it. So that's actually not accurate. I wish the system wouldn't do that. But if it's a class stock, I have to use the actual credit because I made $185 on it. So I'm going to put in $185.09 plus $15.88 because I made that as well. Okay, that gives me $200.97. And then this one was not a class stock. It was the Mutual Investments of Houston through the RWC. And I actually lost money on that, so I can subtract minus $1.74. Okay, so in total, my capital gains were $199.23. So I'm going to put that right here. 199.23. Okay. Now it will say it is already charges you a tax on it, but we're not going to go off of that. I want everybody to go off of the net profit. Okay, and there's a reason for that. So just go off of the net profit. Okay, other gains or loss. Did anybody in the class give you money for any reason? Did you sell candy to somebody? Did you sell notes to somebody? So go look in your checking account. So if I go back to my checking account and I search, or you can look at credits. This is all the money that you had coming in. If it was a transfer, if I was okay, I had okay. So if you just type in transfer, it will show you all the. Oh, this actually shows you all the people who had the fraudulent charges in their accounts because I transferred the money from their account to mine. Okay, but if you look and see transferred from whoever, it will any money that you had coming in. Then you need to list that. Okay, so I'll just let's say these are fraudulent charges, but just for the sake of we'll say I had $500 transferred to me. Okay, from other students. So I'm just gonna other gains $500. Okay, but that's not the only thing. So I'm just gonna put $500 right there. Under other gains, I have to also include my life happens draws. So I go to my event history. So I made money. My oh yeahs are an income, so I have to list that as well. Okay, what about the oh no's? Can I subtract that? Can I just use the net change? This is very important. You cannot use the net change. Okay, you have to use the oh yeahs. Okay, this is very important because certain negative things that happen are not a tax write-off or not tax deductible. If you get your car fixed, that doesn't help you with your taxes unless your car is used primarily for your business. Okay, then it could be an itemized deduction, but again, the itemized deductions wouldn't total up to more than so the $24,800 standard deduction. Okay, again, medical expenses could be considered an itemized deduction, but it won't be enough for any of you for it to have an impact. So you have to include the oh yeahs. Whatever the number is listed in oh yeah, that's what you include in your other gains. So I'm going to go back here. I had $500 that I made from other students for various things. Okay, now I'm going to add that. So I had 2,650 in other gains. Okay. All right, then rental real estate income. I didn't own a second desk, but I know some students did. So you need to total up all the money that you made in rental income and list it on line 12. For me, that was 0, so I'm going to leave it blank. Okay, now line 13 says, again, you just follow the amount, follow the instructions, gross amount. Add amounts from lines 8 through 12. We'll go right here. So I have $65,047.45 plus $1,200 in my business income plus $199.23 plus $2,650 equals $69,096.68. Okay, so $69,096.68. Okay, so that is my gross income. All right, let's keep going on to line 14, moving expenses. Some of you did have, as a Life Happens draw, moving. I think it was $1,000. So some of you did, probably, I don't know, maybe 5 to 10 of you had moving expenses in the RWC Life Happens. So if you did, you can list that there. Okay, so again, check your Life Happens events. If one of them was moving, then you can include that on line 14. Okay, student loan interest has already been totaled for you. You guys have all paid student loan interest, so it's $1,300. Now you're going to add lines 14 and 15 together, so that would be the same, $1,330. Okay, because I didn't have any moving expenses like some of you did. And that gets me to, It gets me to line 17, which is my adjusted gross income. So this says subtract line 16 from line 13. Was that my wife who just walked past? Okay, so I take line 13, which was $69,096.68. And I'm going to subtract my student loan interest, which was $1,330. So my adjusted gross income is, if I can just copy and paste that. Nope. Okay. $67,766.68. Okay. That is what they call my AGI, or my adjusted gross income. Okay, let's continue on. We have line 18, which is itemized deductions. Remember, we're just going to use the standard deduction. Now, there may be circumstances for some of you in real life later on where you don't use the standard deduction, and your itemized deductions might total up to more than the standard deduction. But in this case, none of you will even come close probably to the standard deduction. And actually, in my own personal, like real life, I use the standard deduction. But again, some of you may end up using itemized deductions for various things. So that's why talk to your CPA or your EA, and they can help you with that. But typically, it would be people who've had a lot of medical expenses, or you own your own business and you have a lot of things associated with your business. I don't own my own business, so I just use the standard deduction. So on line 19, go ahead and put in $24,800. Okay, now let's go down to line 20. This is your taxable income. So it says subtract either line 18 or line 19, whichever is checked, from line 17. Okay, so I take line 17, which I already have on my calculator, and I'm going to subtract line 19, which is 24,800, and that gives me 42,966.68. That is my taxable income. So 42,966.68. Okay. Now line 21 says taxes due. So use the amount from line 20 and complete on a separate form, then enter the amount here. If you remember, you go back to the assignment in Canvas. It says use this link to complete the calculation for line 21. Okay, so I click the link right up here. This is the 2019-2020 tax brackets and federal income tax rates. So I'm going to go down here. since you guys earned this money in 2020, we're going to use the 2020 tax bracket. Okay, so I go right here. Remember, you guys are all married, filing jointly. Okay, and my taxable income was $42,966. So if you look at the range, so the 10% tax range is 0 to 19,000, 19,000 to 80,000. Okay, that puts me in the 12% tax bracket because remember my income was 42,000. So I'm going to be right here in the 12% tax bracket. Interesting thing, if you look at this, if you made $80,250, you pay 12% in taxes. If you made $80,251, you pay 22% in taxes. Okay, so that's a major jump in your tax bracket. So there are some strategies to reduce the amount of taxes you'd have to owe within that tax year. You could contribute to your 401k. That would reduce it if you were above that threshold. You could put money into your health savings account if you had one. That could lower put you into a lower tax bracket potentially. So, but everybody here, I believe, will be in the 12% tax bracket. Okay, so let's go back. I have my taxable income. I'm going to times that by 0.12. So everybody will need to do that because you're taking your taxable income and you're timesing it by 12%, which is 0.12, and that will tell me how much I owe in taxes or what taxes are due. Okay, so that comes out to be $5,156. Okay, so I'm going to click on this, and it's going to be $5,156. Okay, that's the taxes due. Now, child tax credit. This is where those of you in the class who have been paying $200 a month for your child and lamenting that, this is where having children can help you financially, because you have a child tax credit. It's $2,000 for each child that you have. So I had two twins, or two children, Elroy and Elfon, if you remember. So I get $4,000 for each child. Okay, so for those of you who don't have any children, you just leave that blank or put in 0. If you have one child, that would be 2,000. Okay, so this leads to my total tax obligation. Hi. Okay, I'll be done in like 2 seconds. Ish. Like 5 minutes. I'll be quick. Okay. Okay. All right. All right. Okay. So the total tax obligation. So I'll go to line 23. Subtract line 22 from line 21, and this is the amount of tax you're required to pay for the year. Okay, so I take line 22 minus line 21. So I have line 21 right here, already in. Subtract line 22, which is 4,000, and that comes out to $1,156. Okay, so that's my total tax obligation. Now for line 24, I need to look at the total income tax withheld. Okay, so if I go back to the RWC, I click on Employment HR, W-2. The federal income tax withheld was $9,019.64. So I'm going to put that, whatever that number is, I'm going to put that into line 24. Okay, now here's where it gets fun for you. Is you need to figure out if you're going to use line 25 or line 26. If it's line 25, that means you get a refund. If it's line 26, which I actually did have 2 students last semester who ended up having to pay more in taxes. But so for line 25, you look at line 24. And if line 24 is greater than line 23, you have overpaid. So you need to subtract line 23 from line 24. For line 26, if line 24 is less than line 23, you have underpaid. And you subtract line 24 from line 23. Okay, so line 24 for me is greater than line 23, which means I've overpaid on my taxes. Okay, so I need to subtract that. So I do not that. So I take $9,019.64, and I subtract $1,156, and that comes out to $7,863. So $7,863.64. Okay, so that number, line 25, is how much I would get in my tax return. So what I'm going to do is when you submit these, I will look at line 25 or line 26. Well, I'll check it to make sure you did it right. And whatever is in line 25, if it's correct, I will give that to you in the RWC. So for those of you who have been struggling for money, this tax refund can be some relief for you. Okay, I'm going to put my signature down here. You can do it in a fancy cursive writing if you want, but and this was on April 15th, tax day, 2020. Okay. All right, that's how you do your taxes. If you have questions, go back and watch the video again, or you can shoot me an email and then submit that form to Canvas. Okay. All right, that's it. So hopefully everybody is able to do that. If you're having trouble with it, let me know. Take care.